Hey guys, hope you're having a great day. Old buddy Tim back with another video, and in this video I'm going to attempt to answer one of the questions I am getting a lot these days, and that is this. Hey Tim, that's me, is it better to rent or buy in the North Alabama real estate market? So that's what we're going to address in the video. Hey, before we get started, do me a favor. If you like what we do here on the channel, click that little subscribe button, click the bell notification icon, click the thumbs up, and that way you'll never miss another video. And God forbid you miss this, because it is an entertainment value. Speaking of entertainment, I've got on my RB, my Red Barn shirt today. Red Barn is a company that belongs to friends of ours, Ken and Anita Corsini out of Atlanta. You might be familiar with them. They do a little show called Flip or Flop Atlanta. Been doing that for a number of years, and I think they've got another show now called Flipping Showdown. So if you haven't seen those, check those out on HGTV. They sent me a t-shirt. I gotta wear it. This is my homage to Red Barn. So all right, let's jump into the video here. We're talking about is it better to rent or to buy in a hot real estate market like we have here in North Alabama? Well, honestly, it's not really the real estate market that I think is what you need to consider when you are thinking about renting or buying. It's simply this. Are you in it for the short term or the long haul? Meaning, are you looking to live there for a year, 2 years, 3 years? Or are you looking to put down roots and be there for a long time? How much money do you have to invest? Because when you buy a house, you got to put down a nice big chunk of change. And, the other thing you might think about is how confident are you in your income? Are you happy in your job? Do you see your employment having issues anytime soon? Well, so you might not want to jump on a mortgage. But I digress. So those are the things that I tell people to think about. Again, number one, are you looking for a place to live short or long term? What do you have to put down? How much money do you have? And how confident are you in the fact that you're going to be able to make those payments? So let's look at both, because I see a lot of arguments both ways on this. And what I like to do literally is just look at the numbers, and then we're going to talk about the pros and cons of selling or renting versus purchasing a home. All right, so let's start out by looking at a couple of properties I found in the MLS. They're actually right across the street from each other. They're almost identical houses. One is for rent and one is for sale. So let me get my long-range eyeballs on. There we go. And I'm going to pull up my screen here. All right, so we are looking at two houses. And we're going to look at one for rent and one that is for sale. So the first one that we're going to pull up is a rental. Now, this is 226 Abercorn Drive. It is in Brookfield Manor. It is in Madison. Bob Jones School District's very much in demand as a rental. You can see it's got 2,200 square feet. It is a 4.3, brand new, never been lived in, and it is on the rental market for $2,500 a month. All right, that's about the average rent for this part of town. Rents here are going to go anywhere from, $1,000 a month up to $4,000 or $5,000 a month, depending on what you are renting. All right, but in this case, this one is $2,500 a month. And again, this is 226 Abercorn. Well, right next door, actually right across the street, 227 Abercorn is a brand new house. It is still under construction, about to be done. Comparable size, 2,000 square feet, 4-bedroom, 2 baths, so just a minor difference in size. It is on the market for $357,811. So the way you figure out is it going to cost you more to rent than to buy is you simply look at what it's going to cost you to get a mortgage. All right, so if we look at the other one here, 226, $2,500 a month was the rental. Let's look at what it's going to cost you to buy this house. Now, one of the things I said at the top of the video was how much money do you have to put down? You can get a zero down payment loan if you're VA, if you're USDA, but if you are a conventional buyer, typically you're going to put down a minimum of 3%, a minimum. But you have to put down at least a minimum of 20% if you want to avoid what's called PMI, private mortgage insurance. It is something that if you put down any less than 20%, your lender is going to take out a private mortgage insurance policy, which you pay for. And it is there if you ever default on the loan, the insurance will step in and take care of the lender. Now, if you're putting down at least 20%, you're not going to have the PMI. And PMI can cost you a couple of $100 easy every month. That's on top of your house payment with your principal, interest, taxes, and insurance. You may have PMI. So if you're putting down a minimum, again, of 20%, you will not have the PMI. So let's go over to the handy dandy bank rate mortgage calculator, and let's see what our monthly payment is going to be on this home. Is it going to be $2,500? That's what it would cost to rent the home right across the street. So let's take a look. So I've plugged in the Madison zip code, purchase price of the house. This is showing a 20% down payment. If you do the 20%, again, you do not have the PMI. If you do anything less than that, you are going to have PMI. This is looking at a credit score of 720 to 739. And if you want, you can go over to bankrate.com and do this for yourself. And we're looking at a 30-year fixed mortgage. All right. So if we look at that, we're putting down the $71,562. That means we're going to finance about $286,000. And these are the payments and the rates. All right. So Bankrate has given us an assortment here of mortgage companies that we may borrow from. You can see what the percentage, the interest rate percentage is. Now, interesting, this is a 5/6 ARM, meaning that for 5 years you will be at 4.375 interest rate. And then after 5 years, your interest rate can go up every 6 months over the life of the loan. We've talked about adjustable rate mortgages on other videos. If you're looking for something short term, you may want to look at an ARM. You can get in, do a refi before the rates go up. Just be aware that with an adjustable rate, the rate will adjust over time. All right, so this is looking at a 4.375 ARM. The upfront cost, now these are the loan fees. They kill you on loan fees. I don't give a damn what the interest rate is. You're gonna cough some up. Now you can see here, this is saying upfront cost $63.68. That's because we're buying down points. You can see this is buying down 1.87 points, and that's why we have such a low interest rate. Okay, basically a point is 1% of the amount of the money borrowed. All right, so if you're buying down points, let's say this was what are we financing here? 286. So 1 point would be $2,800. All right, so but you buy down the points to get a better interest rate. And I'll do another video on that. Over the life of the loan, typically you come out better by buying points down because you do reduce the overall interest payback. All right, but you can see here on this one, the monthly payment is going to be $1,429. This does not include taxes and insurance. Here in Alabama, that's going to add probably, let's say, $400 to the monthly payment. So all in, if you did this 4.375 ARM, you're going to be right around $1,800 on a payment. That's $700 cheaper than rent, but you do have to consider the money that you have to put up. Let's look at the fixed rate. Here's First Mortgage Direct. They are offering a 4.875, and that's an incredible rate now, but that's after buying down 1.7 points. All right, and so that's going to be a 30-year fixed payment on that's going to be $1,500 a month. So you add the $400 for taxes and insurance, you're looking at about $1,900 a month. All right, so you can go down through here and do your own math. Loan Depot has a 5.99 fixed. That's with buying down points. Your payment's going to be, again, around $2,000. So just looking at this, we can compare $2,500 a month rent to this, where your house payment is going to be about $1,900, maybe $2,000 on the high side if you are putting down 20%. All right, so let's go back over here and let's just put down the minimum of 3%. All right, so that's going to raise things considerably, but rather than coming up with $70,000, you're coming up with $10,734. Remember, if you put down anything less than 20%, you're going to have PMI. That is the, again, private mortgage insurance, and that is figured into your payment. And then let's bring in the $400 or so for taxes and insurance. So even if you only put down 3%, if you get a 30-year fix through Sage Mortgage here, you are going to have a house payment of $1,861 plus $400, about $2,200. Okay, Home Infinity, $2,300. All right, so you can see even if you're putting down, the minimum of 3%, your house payment is still going to be a couple $300 cheaper than renting. All right, so you can do this math yourself. You can go to bankrate.com, click on their mortgage calculator, and you can do these calculations yourself. So, from a monthly payment point of view, you are going to come out better if you can afford to purchase. All right, so let's talk about the pros and cons of renting versus buying, monthly payment aside. Renting. Pros for renting, well, there's no long-term commitment. Typically, you're going to sign a 12-month lease. The nice thing is there's no maintenance, no repairs. If something breaks in your rental, the landlord should take care of that, should being the key word. Maybe you have access to amenities. Maybe if you are renting at an apartment complex, there's a clubhouse, pool, weight room. Could be that part of your rent also pays things like your cable bill, your trash pickup, that sort of thing. When you're renting, you also don't have the property taxes. Your insurance cost is typically less because if you are renting, all you're going to need is a renter's insurance policy, which are dirt cheap. All right. One of the big benefits is you do not have to come up with a down payment for a loan. All right. Typically, to get into a rental, you've got to put down a deposit, first month's rent, maybe first and last, but you don't have to come up with a big, a big bundle of cash like you would if you were renting or if you were buying. So let's talk a little bit about the downside of renting. And those could be this. The big one that I hear most is when you rent, you're throwing money away. That's not true. You're not throwing money away. You're not building any equity of your own in an asset, but you're paying for a place to live, which is a necessity. So are you throwing money away? I don't think so. Are you helping the landlord make his payment and build equity? Of course you are. Nice of you. Way to go. Right? But you're not building any equity of your own because you're not buying anything. You are literally just renting it. So there's no equity. Your rents could go up annually. Typically, rents raise a little bit, 5% or so every 12 months. But those are the pros and cons of renting. All right, so let's talk about the pros and cons of home ownership. Number one, you are investing in an asset that should be appreciating every year. Typically, property values go up, all right? Unless you are in a part of an area of town where the property values traditionally have not gone up, you should be able to see a return on your investment. And to me, that's the biggest reason why you buy, is because you are actually putting your money into an asset that will give you a return. The odds are that if you buy a house today, 15, 20, 30 years from now, when you sell it, that house is going to be worth a hell of a lot more than it is today. So you do get that appreciation. You are investing in an asset that will pay you returns, okay? You also get what we call pride of ownership. A lot of folks, that's very important, the fact that they own their own home. It is a point of pride. If you can afford to buy a home, good for you. That means you're probably doing pretty well. Nice to have that home of your own. On the downside, you may not have access to amenities unless you've got your own pool or you live in a subdivision that has a clubhouse, a pool, that sort of thing, as many of the newer subdivisions do. You're responsible for your own maintenance and repairs. This is a big one. When you are the homeowner, something happens to your HVAC or you get a hole in your roof, it is up to you to take care of that. You do not have a landlord to call. You're going to be paying property taxes. You're going to be paying insurance. The good thing is property taxes here in the state of Alabama, we are the second lowest in the country. And so that's a good one. Property taxes here do not go up that often. I don't recall the last time we had a property tax increase, but you are going to be responsible for that. One of the big things about buying a home is coming up with that down payment that we talked about. All right, unless you are doing a USDA loan or a VA loan, you're going to have to come up with some kind of down payment. So if you don't have a big bucket of cash, you may not be able to buy a home. Another pro to buying a home is your mortgage, unless you do an ARM, should be the same over the life of the loan. If you do a 30-year fixed rate loan, your house payment, your principal and interest should never go up. Taxes may go up, your insurance may go up, but your principal and interest should stay the same. Okay. And finally, your mortgage, at least the interest on your mortgage, is tax deductible in most cases. So you have your pros and you have your cons. And again, there's no easy answer because it depends solely on you. You know, what are your plans? Are you looking to move to North Alabama, put down roots and be here for a while? You've got the money to put down on a home? Well, my advice would be buy a home. Put the money down, get that asset in your name, you know, build the equity, enjoy the appreciation, and then 3 to 5 years, if you're looking to do something else, you're going to be able to sell that home for a profit. So there you go. Which is better, renting or buying? At the end of the day, it comes down to you. It comes down to your goals. It comes down to how long you plan on being around, and it comes down to the money. And then again, it just comes down to your personal preference. I know a lot of young folks, a lot of you young folks, God, I sound like a geezer. A lot of young folks, these here millennial types, are really not that eager to buy a home. They're not that eager to put down roots. The one thing that I found about that generation, a lot of them, you know, they don't want to be tied down to one spot. They want to move around. They want to travel. They want to do that sort of thing. So again, at the end of the day, when it comes to renting versus buying, there is no clear answer. One is not better than the other. It simply depends on you. All right. Hey, I hope that was helpful for you. Again, if you like what we do here on the channel, click that subscribe button, click the little bell notification icon. That way you never miss another video. And hey, if you are looking to relocate here, whether you're looking to rent or looking to buy, I'd be more than happy to help you out. Of course, we've got Revolved Realty, 87 agents. I'm losing count here. We're growing like crazy. But we have 80 some odd agents, and some are odder than others, who are ready to go to work for you to help you find the perfect home if you're looking to buy. We also have ties to a lot of property management companies. So if you are looking for a rental, reach out. My contact information is below. I'd be more than happy to refer you to someone who could help. So, all right, guys, I hope that was helpful. Again, when it comes to renting versus buying, there is no clear winner. It is up to you. All right, so that's it, guys. I hope you enjoyed the video. Thanks again to Ken and Anita for sending me a cool t-shirt, and I'll see you on the next video.